Well, it's now time to start with the Mauritius Investment Summit, and we'll call on to the team to join up one by one. But before that, as a brief introduction, the Mauritius AFSIC has been evolving for the past 30 years. 18th of November, we're going to celebrate 30 years of the Mauritius AFSIC. And over the 3 decades, the AFSIC of Mauritius has evolved. 4 generations, actually. First generation with the MOBA Act in 1992, which was the Mauritius Offshore Business Act. And it was predominantly about offshore business services, was about administration and advisory services. Then 2001, we had the Financial Services Promotion Act that came in. And 2007, the third generation was about regional products and services. The AFSIC went up with substance and high-value services as well. And until recently, 2021, we had the Virtual Asset Investment Initial Token Offering Services Act that was introduced that places the Mauritius AFSIC in the global fintech arena. So, having said that, why Mauritius AFSIC? We have, over the time, the Mauritius AFSIC have structured about $190 billion to India for the past, since 1992. And today, this competency, this ecosystem is being put to the fore to promote funds into Africa. Already, according to a study by Capital Economics in London, $82 billion have been structured onto the African continent through the Mauritius AFSIC, and that's 9% of total FDI into the continent is structured through the Mauritius AFSIC, creating directly 4 million jobs on the continent and an annual income to government across Africa that's estimated at about $3 billion annually. So that's the importance of the Mauritius AFSIC that many people don't know. But we have here today an excellent panel of professionals from Mauritius, which I would like to call onto the stage to join me here, namely Mr. Jérôme de Châteauneuf, Group Financial Director of Ciel Group, Mr. Thierry Vallée, Interim CEO of Africa Bank Limited, Mr. Graham Robertson, the Chairman and CEO of Intreja Capital Limited, Mr. John Felicité, Director at Okorion Corporate Services, Ms. Anusha Naidu, which is already here, so Corporate Finance Executive at Select Africa, and Mr. Bertrand Casteres, outgoing Group C Chief Executive Officer of the Mauritius Union Assurances. Please welcome the panelists to the stage. I will go straight into the questions, but while I do that, I'll be introducing the panelists as well. I will first start with Jérôme de Châteauneuf, who joined Ciel Group in 1993 and is currently the Group Finance Director of Ciel Group. Jérôme, Ciel Group has set its footprint across several African and Asian countries in various sectors, namely agro-industry, healthcare, hospitality, textile, banking, finance, and the group has a market capitalization of over 8.6 billion rupees as of 30th of June 2021. And during the pandemic, while the hospitality sector took a big knock with a contraction of 86%, but healthcare grew by 26% for the group and financial services at 9%. My question to you, Jérôme, is that what does Africa offer to one of the biggest conglomerates in Mauritius, and how do you envisage the future development of Ciel Group interests across Africa?
Thank you, Vinay. Good morning to everyone. So just proud to say that this year Ciel is celebrating its 110 years of existence. So we've been in the trade for a long time. And we started our journey in Africa in 1989. Through investment in Madagascar, where we started our textile operations. At that time, the main reasons for our move to Madagascar was for economies of scale, because we had built up capital-intensive capacity in Mauritius, and also for cost competitiveness. And hadn't we done this move, we'd probably be out of the trade today. So that was our first move in Africa. And subsequently, we invested into the agro business. We invested into a sugar farm in Tanzania in the late 1990s, and which was followed by investment in Kenya. And there, the main reason was because of the sheer size of the market and the growth potential. I mean, Mauritius, we're in the middle of Indian Ocean. For export-led companies like ours, we used to produce, be it our textile or sugar, and sell it 12,000 kilometers to our traditional European market. And today, I mean, in the last 20, 30 years, we've been able to produce at our doorstep, and the sheer size of the market offers us a huge potential. So that has been our let's move today. I would also say that our investment approach has always been to build the know-how and the expertise locally, and then once we acquired the necessary know-how, then we move it to the region. So before running, we need to walk. And in the future, I mean, we can see a lot of opportunity. Even Ciel, the holding company, is today listed on the stock exchange at a discount, being a closed-ended fund. We've got a European-based shareholding of more than 25% in our capital structure, and they are using our platform to invest into Africa. So that's also a possibility of using a Mauritian-based company listed on the exchange to invest in this part of the world, which is mainly the region and East African countries.
Excellent. Thank you, Jérôme. That was quite to the point. You mentioned about the stock exchange. I just want to follow up immediately with you on a question. The stock exchange of Mauritius has some 67 international securities listed on its platform and has dual listing with at least 13 exchanges globally, including the LSE, right? As a director, I do believe you're a director of the Stock Exchange of Mauritius. Can you please share with us how the Stock Exchange of Mauritius has emerged as an attractive capital raising and listing platform for both local and international operators?
Yeah, I think there's been two phases of development of stock exchange, which has 30 years of existence today. The first couple of years, up to 2010, it was mainly an equity-centric local platform. Since then, there's been a lot of transformational changes, both at operation and on the regulatory ecosystem. I'll maybe just mention two main points, which I think was key to the development of international listing in Mauritius. One was the fact that in Africa, Mauritius is the only listing platform where we can raise capital in various hard currency, be it dollar, pound sterling, euro, and even South African rand. And also, you can list your company in any of those currencies. So that has been a big step forward for our local exchange. The second step was the fact that the listing rules were revamped to simplify and accelerate the processes of getting dual listing. By just simplifying the compliance and the costs associated to it, we've been able to attract a few international issuers in the forthcoming years. And throughout the years, as Mauritius was building up as a reputable IFC, we've seen a lot of niche international issuers coming to our market. Since 2010, I would say around 100 different issues in different class of assets were made on the Mauritian Stock Exchange, and we raised about 7 billion rupees, of which 5 billion rupees can be attributable to our international issuers. And last but not least, I think the way we managed to attract also foreign issuers were the mere fact that the performance of our top performing issuers on our exchange has been more than 15%, 15 to 20% over the last 10 years. So that's been quite remarkable given the current market conditions. And maybe just to end, I'd just like to maybe give the example of Great Real Estate, who came to Mauritius and incorporated themselves in the global service sector in 2012 and got listed on the exchange in Mauritius. At the beginning, they had 3 assets in the portfolio in 2 jurisdictions. And today, 10 years down the line, we have more than 25 investments through 7 countries in Africa. And throughout this journey, they've been able to raise $450 million. And today they are listed on the LSE. So I think it's quite a good example of how successful we can be to attract those different investments.
Thank you, Jerome. This is very interesting. Just before I move to the next panelist, I also wish to highlight that last year, only about 8-9 months ago, a second exchange came into operation in Mauritius, Afrinex, which is a Pan-African-based exchange. And within that 9 months, they have a market capitalization of $6.63 billion already. So it shows the ability of the Mauritian jurisdiction to raise capital. My next panelist I would like to ask a question to is Mr. Graham Robertson, born in Australia, I believe, and Chairman and CEO of Intra-Asia Capital Property Limited, established in Singapore, based in Mauritius, and Graham has over the past 40 years of experience in mining, financial services, and corporate management across Asia and Africa. So, Graham, I would like to ask you as an expert and investor in Africa, can you highlight the strength of Africa as an investment destination, but also the challenges that you face while investing in Africa?
Well, thank you and welcome everyone. Africa is an investment destination. In the grand scale of things, there are only two areas which generate the funds that make everything work in Africa, and that is in mining and in agriculture. Mining, because Africa produces most of its wealth through mining, whether oil or gas or minerals. Secondly, the potential of Africa is in agriculture to become a breadbasket of the world. And I think we can watch the effects of the Ukrainian and Russian dispute on agricultural supply throughout the world to see the significance of a relatively small country compared to the vast continent of Africa on world trade. And I think Africa does have that huge potential. If you look at healthcare, communications, all those are basically service industries funded out of the revenues gained out of the mining industry in particular, and secondly, out of the agricultural industry. If you look at the problems of Africa, there are many. Politics, power is from the top down. You change the top, you change everything down. So your best friend in one regime may become irrelevant in the next regime, and you may have someone who doesn't like you in power. So the key to that is probably not sidelining political involvement to the maximum possible. The other problems are bureaucracy. A lot of the African bureaucracies were developed during the colonial periods, and a lot of them haven't fundamentally changed from that. So they're inefficient and time-consuming. Time in Africa is a different concept to time in Europe or time elsewhere. So those are major problems which find in Africa. Yet the potential is great. I draw the line in 40 years ago in Asia. Asia was 30% explored, 70% unexplored. Now, today, it's 70% explored, 30% unexplored. Africa today is 30% explored, 70% unexplored. So in the mining industry, the propensity of finding something significant is far greater in Africa than anywhere else in the world. And that is a tremendous incentive for mining companies to enter into Africa. So I think that would answer the question.
Thank you, Graham. I would like to just ask you, I've seen that your organization is based in Singapore but operates from Mauritius. If you could take us through that rationale?
Well, in 1993 or 94, I had 30 operating companies in Asia, and most of them were structured through the BVI and Cayman Islands and interesting jurisdictions which are called tax haven jurisdictions. And I looked around because the companies were generating billions of US dollars in revenue, and I needed to find legitimacy. So I looked around at jurisdictions which were low tax jurisdictions, but definitely not tax havens, with a solid regulatory regime, and basically came up with Ireland and Mauritius. And because I like warm weather, I chose Mauritius. And I set up my first companies in Mauritius in the early 90s and later on. So I'm involved in a number of Australian publicly listed companies in the mining industry, and they're all held through my Mauritian subsidiary, which I set up in 1998 to do that. And I must say, what I've found in Mauritius has never been a problem. It's always been beneficial to me, particularly with the involvement in Africa, because I set up in Mauritius. I own the concession in Africa through a Mauritian company. If I want to sell it, I sell the Mauritian company. I've had a problem, I'll just divert slightly, a problem in Tanzania. In 2015, the president changed, and John Magufuli became the president of Tanzania and started to nationalize the country, following Chavez in Venezuela, a very similar sort of operation. My staff were threatened. I had to move people out of the country. It was a horrific situation. We had a monopoly of coal production in the country. We supplied Malawi, we supplied Rwanda, Kenya, Uganda, all in the region. But being a monopoly in a nationalistic environment is definitely a very bad thing. The problem was that we hadn't set up the company through Mauritius, because Mauritius didn't have a double tax and investment protection treaty at the time in 2011 when I started producing the operations. So if we had been able to set up in Mauritius, I would have, and last year we sold the company in Tanzania. We still haven't got approval from the Tanzanian government 11 months after the sale went through. And that is creating all sorts of problems for us. But if I'd done it through Mauritius and I had a Mauritius company at the time, I would have just sold the Mauritius company. Very simple. No capital gains, and no government interference on the sale. And that is really the big benefit of utilizing Mauritius to facilitate investment in Africa. Yeah. It's all a matter of de-risking that investment.
Thank you, Graham. This is so important, because often we don't pay attention to the investment promotion and protection agreements. And this is where Mauritius, as an AFSIC, plays an important role, because we have several bilateral agreements across the continent in investment protection across, for your operations on the continent. As Graham mentioned, we have several cases where, the government intervened and successfully got the investor their dues. And also, I would like to highlight, taking opportunity on what Graham has said about, the legitimacy and assurance that the Mauritius AFSIC gives. 2 years ago, only 2 years ago, we were grey-listed by the Financial Action Task Force. And we got out, Mauritius AFSIC got out within record times. In just 18 months, we got out the FATF grey list. We exited that, and only last month, in the first assessment after getting out, we are only the 6th country in the world to have scored 40 out of 40 on all the requirements by the FATF. Only the 6th country in the world to have achieved that, including Regulation 15, which is about making sure that we cater for the AML-CFT measures for fintech services. And so Mauritius, that's why I said, it's been positioned in the global arena in the fintech area, because we're only one of the few countries in the world that offers a proper regulatory framework for developing fintech services. Coming to the next panelist, I would like to now approach Ms. Anusha Naidu, the head of corporate finance at SILEC Africa. Anusha, your expertise is microfinancing for housing, education, and also consumer loans. We know Africa is a market, a continent where there is the market penetration for banking and insurance services is quite low, and certainly you have certain expertise to share with us. It is a continent, after all, where the IMF has estimated that there's a finance gap of around $150 to $180 billion annually in financing projects on the continent. Anusha, we won't be talking about major projects, but certainly the work that you do close part of the gap. Can you take us through what you do and how this can develop access to finance across Africa even better, and what role do you expect the Mauritius IFC to play in that?
Okay, great. Thanks, Vinay. Good morning, everybody. My name is Anusha, and I head up corporate finance, capital raising, and structuring for Select Africa, which is a pan-African microfinance institution. We have loan book operations in Kenya, Uganda, Malawi, Lesotho, Eswatini. From my accent, you can gauge that I'm actually South African. But our holding company and consolidation level sits at Mauritius. Why did we choose Mauritius as that holding company structure? Well, as you can imagine, as a non-deposit taking MFI, I'm constantly in the market raising wholesale capital. And I do that via a mix of domestic capital raising programs where I develop node programs to attract, institutional investors, local corporates, so it is very much development of African capital markets, as well as international development finance institutions and impact investors, given our focus on financial inclusion. Mauritius made natural sense to us in the sense that, it is quite an international financial hub. For me, running a treasury operation in Mauritius makes my life a lot easier in the sense that I have access to hard currency, local currency, ZAR, various hedging strategies as well, both from a currency perspective and an interest rate perspective as well. I am able to repatriate cash both to the operating subsidiaries who require the cash to extend out loans, and then obviously to repay those loans subsequently as well. I also find that, from a talent, skills, technology perspective, our team is outstanding. I'm able to, put in place segregation of duties, economies of scale, having a finance function that's outside of the actual loan book operations. That is quite a game changer for us. It's also, quite a robust legal framework, and from an investment standpoint as well, my investors are always looking for stability in financial markets, enforceability, regulation, etc. That becomes quite key in moving capital flows. It's also, the fact that us as a microfinance institution very much see ourselves as a fintech player. Microfinance in Africa is not a traditional bricks and mortar business. And in the different jurisdictions that we operate, whilst we might have offices, particularly with COVID and, people not wanting to travel too far, etc., we've had to develop, client apps and mobile offerings, USSD, etc. And Mauritius, as a financial and tech hub, really offers that to us because we've got a team of, tech players who are able to execute on our strategy. So, quite a few very pertinent reasons, and also, quite a simple one is the time zone as well. It's 3 hours plus GMT. So often is the case, we're in the same time zone as our operating loan companies, as well as, having a little bit ahead of time as well. So, that's pretty much it for me.
Thank you. Thank you so much, Anusha. I will now move to Bertrand. Bertrand Casteres is the outgoing Group CEO of the Mauritius Union Assurances. MUA is the largest insurer in Mauritius by market capitalization and recently integrated operations into Kenya. Right, so Bertrand, the Mauritius Union Assurance, established in Mauritius for over 70 years. And we just heard that, the market penetration in Africa is quite low. From what I understand, it's less than 5%, right? So the question to you is, can you please take us through the vision and objectives of the Mauritius Union Assurances in Africa, and why Africa, and why now?
Thank you, Vinay, and good morning, everyone. Indeed, MUA was founded in 1948, so almost 75 years of existence. It's a Mauritian-owned company with approximately 2,000 shareholders listed on the stock exchange in 1993. Well known as a leader company on GI insurance and non-life insurance. We also do life insurance, health insurance, and pension administration. In 2014, in fact, the company decided to look at the region, and we acquired in 2014 the Phoenix Group with offices and entities in Kenya, Uganda, Tanzania, and Rwanda. The main objective of the company was to achieve geographical diversification, which was met with the acquisition of four entities, and at the same time also insurance being a scale business industry looking to achieve the 10% market share in all of our markets. We've achieved it in Rwanda a few years ago. The challenge is in Kenya, where we had only 0.5% market share. So that's why, as you mentioned, Vinay, we acquired the Saham Kenya in 2020 and integrated last year in 2021 to achieve between 2 and 2.5% market share. The challenge in Kenya is that it's a very fragmented market in insurance, leader having 8% market share. So why moving to Africa? Well, because first, Mauritius was starting to become a bit small for us, as mentioned by Jérôme and Ciel. And we noticed that, as you mentioned, the penetration rate was and is still quite low in Africa. To give you a few comparisons, apart from South Africa, which has an insurance penetration rate of approximately 15%, Mauritius is at 4%, and the East African countries are well below 3%. 2 and 2.5% for Kenya and Rwanda, and Uganda and Tanzania are below 1% penetration rate. So it gives you an indication of the huge potential of bringing new products, insurance products, and we are convinced that the insurance sector and insurance industry will grow significantly in those markets. We see it, as Graham mentioned, also around agriculture, around oil and gas, also around its vulnerability on cyber. Africa is the most attractive region in the industry, in the world, but also has a lot of vulnerability, environmental vulnerability, about natural catastrophes, but also in terms of cyber. So MUA and in Mauritius, we have a very strong network with highly known reinsurance companies in the world, Swiss Re, Munich Re, amongst others, who help us to bring us their expertise and products to protect more and more people. So Africa is our favorite playground. We've grown quite significantly in the last years, where our market cap has more than doubled in the last 5 years, moving from the 30th player on the stock exchange in Mauritius to almost the 10th player now. So we're doing quite well, and last year, for the first time now, more than 50% of our revenues comes from East Africa, as compared to Mauritius. We are expanding now more and more, bringing now also health insurance in Kenya and life insurance very soon in the other markets. Also through digitization, innovative distribution, which we cannot test in Mauritius. Mauritius being so small and with 1 million inhabitants, once you cross the road, you see agents, brokers, insurance companies. So the challenge is not the same, but much more exciting to be in East Africa with more than 150 million people in the 4 markets I've mentioned, Kenya, Uganda, Tanzania, and Rwanda. So that makes our playground much more exciting from Mauritius. That's in a nutshell what we do in East Africa.
Thank you so much, Bertrand.
Thank you.
I will quickly move now to John, Mr. John Felicite, Director at Okorian Corporate Services, and with 26 years experience across several markets. Okorian Corporate Services prides itself in helping organizations entering new markets in a risk-mitigated approach, navigating through complex international regulatory environment. So John, Okorian, today a leading management and advisory services based in Mauritius, has an act to help organizations to adapt and prosper. So my question to you is that the recent evolution of the Mauritius AFSIC with the recently promulgated VITOS Act, which is the Virtual Assets Initial Token Offering Services Act, has strongly positioned Mauritius in the fintech global arena. Along with the VCC, which is a variable capital company that was presented earlier before our session started, also promulgated earlier this year, have these made Mauritius a much more attractive and reliable platform for you to help your customers into looking at setting up in Africa?
Thank you for the question, Vinay. I think the short answer is absolutely, but I think we need to ask ourselves, the other question. I mean, Mauritius has been on this transformation for many, many years. The fact that it's recently launched these 2 new licenses, and it's more and more often ahead of the financial innovation curve, I think that just goes to actually separate how Mauritius operates as a financial center compared to others around the world. In an increasingly competitive world where many financial centers are trying to position themselves for Africa, I think Mauritius, really understands what the risk of operating in the continent is. Mauritius itself has been transformed as an economy over the past 30 years, since independence, 50 years, and has continued to innovate and launch new areas of actual sectors for the actual economy to grow and actually develop. And I think this has actually helped Mauritius to stand itself apart from many other jurisdictions. I think the comments that Graham raised earlier about risk in Africa, we talk about the technology of tomorrow, but obviously it requires the raw materials of actual tomorrow, of today. And where should those companies be structured? Where should they be actually set up? Mauritius lends itself from both financial stability, economic stability, free flow of foreign exchange, and all those factors together make Mauritius stand out.
Thank you. Thank you so much, John. I will go to the final speaker, Mr. Thierry Vallée, Interim CEO at the AFSIC Bank Limited. Thierry, an engineer by trade, with 20 years experience in the finance and banking environment. And AFSIC is still a new bank, about 15 years old, if I recall. One of the first customers of AFSIC, so I should know that. And known across not just Africa, but the globe for its AFSIC Bank Mauritius Open for golf. And AFSIC prides itself as the bank that built bridges with an entrepreneurial approach to tailor flexible financing and investment solutions. So my question to you, Thierry, is that what has been the basis of the successful growth of AFSIC Bank? How does the Mauritius IFC, the inherent strength of the IFC of Mauritius, allows AFSIC Bank to successfully find funds for projects in Mauritius and across the continent?
Well, thank you, Vinay, and thank you for being, I would say, faithful to AFSIC for the last 15 years. Indeed, we just had our 15th anniversary last week, and besides being a success story, I would say creating AFSIC from scratch, from I would say a clean sheet 15 years ago has been a fantastic journey. As one of the founders executive, I have one of my other founders executives, James Benoit, here, who is the first CEO of the bank. And it was, not I would say, a given at the start. We were in an environment with international banks and local banks, which was there from a very long time also in Mauritius. So we really looked at where we could make the difference and set up ourselves as, I would say, private and corporate banking. And we stayed resilient on our business model over the time and built a strong foundation from the start by trying to, I would say, one of our aim being to connect people, places, and possibilities, I would say, across Africa, to Africa, and from Africa. So, as Bertrand said earlier, Africa is our playground. This is where we are developing ourselves. And this journey has developed over the time more and more. Today we have clients from 160 different countries, but I would say 50% of it is linked to Africa, at least. So definitely, that was great. How we build that is also with people. I think the culture we had at AFRICA at the beginning, it was, very hard work. We did play hard also, but that make it, I would say, a great time. And we benefited definitely from the ecosystem of Mauritius, where I would say there's been a good partnership from private and public, whereas so it's a continuous evolution of the ecosystem in Mauritius. So we started with, I would say, low tax regime or no tax initially, but with also a lot of investment protection agreements with different African countries. And in addition to what Graham said earlier, yes, if you have these types of agreement and you invest in Africa, that could prevent from nationalization, for example. So great network to go through Mauritius, either to or from Africa. We also see a lot of flows on the other side. We pride ourselves to also be a private banks and accompany the entrepreneurs of Africa. So this is something that we'll continue to develop. Great thing of Mauritius, in addition to all the various, I would say, legislation, vehicles, we just saw a new one that just before the VCC, but there's a list of entities, legal entities that we can create in Mauritius, from a normal company to trust, a foundation, protected sales companies, etc. We have an array of, I would say, products in terms of entity, and ourselves as a bank, we have an array of products that are innovative on the market, but also products that is not readily available in Africa most of the time. We, as a bank, helping the transaction to and from Africa, we can transfer money in any country in Africa or from Africa when there's no shortage of currency on the other side. But we also can open accounts in 10 currencies, 10 African currencies, beside all the odd currencies. So we have even, I would say, some types of product that you won't find in a European bank in order to help the specific condition of working with Africa. And I would say last but not least, in Mauritius also we have a pool of talents, be them Mauritius or expatriate, because it's also a great place to live. I think qualified one of the best places to live around the globe. And so, it's great also to be domiciled in Mauritius. At the same time, you're creating substance there, but from Mauritius, you can go and easily access Africa.
Thank you. Thank you so much, Thierry. I mean, you said a lot, and certainly to build on this, you mentioned, for example, in terms of the different attributes, no foreign exchange control in Mauritius, and you also mentioned a lot of, attributes of Mauritius being low tax, yes, because in the GBC we have an 80% exemption, which makes an effective tax rate of 3%, but it is a well-regulated jurisdiction, as we mentioned earlier, 40 out of 14 in the FATF, and Mauritius works closely with all the major AFSICs of Mauritius, of the world as well. So certainly we've seen here the different attributes, the different organizations. I would like to come back to Jérôme because at the end of the day, this is Mauritius Investment Summit. So you as a conglomerate with different sectors in our operation in Mauritius, you got one of the major hospitality services in Mauritius as well, tourism, which is picking up again. I think the recovery is back on track when it comes to tourism industry, and all the other, whether it's about property development, whether it's about textile. You are one of the leaders in textile, not just in Mauritius, in the world as well. Can you share with us what are some of the investment opportunities in Mauritius as we speak right now?
Okay.
First of all, I'd just like to say that, okay, we're a conglomerate which are diversified in 6 sectors of the local Mauritian economy. But we've always did those shift in those industries with partners. I mean, that's in our DNA, be it in the hospitality, where we've got the Four Seasons and Shangri-La, 2 international brand of renown, who's joined with us to make it happen. When we started in the healthcare, we had Fortis from India managing our 2 facilities in Mauritius. This was until 2019, where we started to manage our own clinics, be it in Mauritius or in Uganda, where we also positioned in Kampala. So what are our opportunities? On the agro side, we are looking currently at other opportunities in Africa. We have today a Tanzanian plant which is very successful, has been a successful story because we managed to ramp up the production from 35,000 tons of sugar to more than 110,000 tons of sugar. We're also in Kenya, which is more challenging, but we're getting there. And we are looking at opportunities in Ethiopia and in Uganda and elsewhere. So that's mainly from the agro side. On the healthcare, we are opening up our shareholding structure, and we are looking for a strategic partner in the healthcare sector, which will help us pursue our investment strategy in Africa. So we'll onboard a strategic/financial partner locally who will give us the mean and the know-how to develop further into Africa. We are currently the leader in Mauritius and in Uganda and in the private healthcare sector. On the properties front also, we are starting an agri-hood project, so under the Smart City Technopole scheme in Mauritius, which is quite unique. So we'll be selling plots of land linked to agriculture. And we, of course, would like to attract foreigners to acquire those properties. And there also we are looking for equity partners in different phases of the project. So, Vinay, we have opportunities today in the group, not only at the holding level, but at each cluster level. And we are thoroughly looking at the possibility to raise equity funding. I met personally some very interesting potential partners here during the conference. And as I said, it's in our DNA, and we're going to get the right people on board to make it happen.
Thank you, Jérôme. Earlier we heard Thierry, and there's something that appeared on the board. I don't know if you saw that. The banking asset to GDP ratio is 438%. That's in Mauritius. So it shows the strength of the banking sector, right? And the capital adequacy ratio is twice what is recommended, which is at 20%. Usually in most countries it is 10%, in Mauritius it is 20%, right? So it shows the strength and the sound banking and financial environment of Mauritius. I don't know, Thierry, if you want to add anything more on this, anything that you would like to say on this.
Thank you, Vinay. Yeah, the minimum capital adequacy ratio in Mauritius by law it's 12.5. But yes, in average, with the different banks, probably we are in the region of 20 right now. So it's, I would say, well capitalized. And all the banking assets are definitely much higher than the GDP because, we are like 1.2, 1.3 million inhabitants, but we bank for Africa. So a lot of money goes in and out through Mauritius. Today, ourselves, we are a leading bank in the global business sector, so going to Africa. As you said, 15 years, but we're already the 3rd largest bank in Mauritius, so one of the systematically important banks. And but there's also other international banks and other local banks. So the competition is there. People have a choice to have the right financial partner to come and help them. But I think what is very much important also is compared to Africa, where if you have to raise funds, today you will raise funds probably at 12% on a banking debt secured. In Mauritius, our cost of funding is much lower. So having your structure through Mauritius can help you also access to wider type of products, but also cheaper cost of fund.
Yeah, thank you, Thierry. I just wish to highlight that 2 weeks ago, the IMF issued a statement, like a report, and saying that one of the robustness and to show how an IFC is strong is to look at its asset under management and GDP ratio. And Mauritius is one of the highest. It's 30 times. Our asset under administration in the Mauritius IFC is 30 times the GDP of Mauritius. So it shows, you know, how foreign investors trust the IFC and use the Mauritius IFC to structure the investment, not just in Africa, but also in Asia as well. I did mention earlier that we're still cumulatively the #1 purveyor of funds into India, and today India is growing at 7.2%, and that's the expertise that we want to put at the service of for the future development of Africa. After all, Africa is home to 17% of the world population, the fastest growing demography in the world, 30% of the world reserves of minerals, and 60% of untapped arable land, right? So the opportunities are there. I would like to just have a last question before I open the floor to question, and that question is to Bertrand, because Bertrand is leaving Mauritius in the next few days to go to France with his family, and I would like him to share with us, especially his family who's from France, the experience in Mauritius, and are you coming back to Mauritius, Bertrand?
Thank you, Vinay. I won't be long. Indeed, when we decided to leave Mauritius, it was a difficult decision to take, but I'm sure you'll understand you have sometimes family pressure, and my wife, who's only French, asked me to go back to France to prepare my children to education, to their study. But when you leave, when you spend 10 years in Mauritius, and my family grew up in Mauritius as well, you always stay in Mauritius. So I will be traveling back to Mauritius very often and hoping to come back in 10 years' time, probably to end my career in Mauritius. It's so attractive, as you can see. Living in Mauritius is just great.
Yeah. And the golf photos, by the way, is courtesy of Thierry Vallée for the Africa Bank Golf Open. That's due in the next few days,
If it
right?
was my courtesy, maybe there would have been a wine cave also.
Right. Good. Any questions for the distinguished panelists here? This is your chance to ask them tough questions. Or they've been excellent. No more questions. Any comment? Any observation?
Je kan pas expression créole, s'il vous plaît, hein?
Good. The room is quiet. That's a good sign usually, which means whatever we've said has been clear, no ambiguity, everybody is happy. Yep, we have one question there.
I'm wondering, we plant trees in Morocco, and we have VC using carbon offset for $9.60. I'm just wondering, with all the activities you do, coal, insurance, all these different sectors, industries, is there an interest in offsetting, carbon? And there's an incredible opportunity, $9.60 a ton in Morocco, verified by the Moroccan government. Is there any reaction to that?
Let me answer. Yes, carbon sequestration and carbon offsets are extremely important. The coal mining operation in Tanzania, I ran our electricity through solar, so even that. One of the worst things in sub-Saharan Africa is the collection of charcoal. Charcoal is a huge industry, and all the fires, all the local village fires are done by charcoal. What we did, we set up the Mbalawala Women's Group in Tanzania. We brought in briquetting machines from China. We taught them to get coal fines, mix them with clay, briquette them, and put them in a specially designed oven to replace charcoal, because charcoal is the destruction of forests, the destruction of trees, and a terrible carbon sink for the environment. So the answer is yes, we do think very highly of that. On the banking side, I'll preempt Thierry and say that from AFRICA Bank, there's a very strong green loan base. And in fact, I was going to buy an electric car a few months ago, and I went to AFRICA Bank, and I found I could get 1% less interest on the loan because it was an electric car. So, and Mauritius as an island is extremely extremely recognizes the importance of the environment. Unfortunately, through the agricultural industry, there's been a huge amount of fertilizers and pesticides applied to the soil, and it will take many years for that to be in a sense sustainable in terms of more modern agriculture. But Mauritius as an island is very, very important, and we have projects in growing mangroves, in creating carbon sinks. It is a very important aspect of our operations.
Thank you. Thank you, Graham. I also wish to point out that when it comes to climate change, Mauritius is one of the most vulnerable nations in the world. We're in the top 10 most vulnerable country in the world when it comes to climate change. So to that end, you can understand the work that's being done in Mauritius to protect climate, and in terms of carbon neutrality, there's a lot of work, a lot of framework being developed. I can tell you that in terms of energy production, currently 23% of the production of energy in Mauritius is on renewable energy, and the challenge is to go up to 60% by 2030. So it's a huge challenge. And in terms of expertise that we have developed in hydropower generation, for example, 2 months ago, one of the producers of electricity in Mauritius opened and is currently operating a hydropower station in Rwanda as we speak, and that was inaugurated about 2 months ago. There are also, when you look at the tourism industry, there's 100% responsible sourcing, and I don't know, Jérôme, if you could say a few things about, I did hear CL Group working on 100% responsible manufacturing for textile products as well. It's not just about making sure that protecting the environment, but also making sure that there's no child labor and these type of things happening globally as well when it comes to whatever is being sourced, whatever is being done by the Mauritius businesses. So that's really well established on the island, and we do believe that we have set the right ecosystem, and the Ministry of Financial Services and Good Governance is also setting up a framework for impact investment on the continent. We heard earlier Christophe Chabot was talking about how the variable capital company will be used for impact investment on the continent as well, and all the selection, the criteria will be part of that process as well. Any other question? Does that answer your question, by the way? Good. Any last word, gentlemen? Because we got 2 minutes. So in 20 seconds, Beatrice? No? John? Good. And Anusha? Graham?
Maybe just to end up, Vina, I just wanted to say that our experience in Africa shows that Africa is a land of opportunity, but you need to understand the rules of the land, and this is very important. And you need to have the deepest respect of how you do business, in terms of environmental, in terms of social, across the board. So social inclusion also is very important when you implement yourself in whatever region. So we need to do it the right way. I just wanted to end on this.
Thank you, Jérôme. That was exactly going to be my ending note as well. As you go into Africa, most of the investors would say the reason why they second doubt the investment on the continent is because of the risk perception, the perception of governance and stability. And the Mauritius jurisdiction is offering that intermediary jurisdiction to mitigate your risk and make your investment on the continent viable. So thank you, ladies and gentlemen, for your attention, and have a nice rest of the day. So see you soon. Come speak to us at any time that you want. We'll gladly share more information with you. Thank you. Bye-bye.